Yo, what's up? This is Noble. I'm back. You're tuned in live to Inside of Trading. Inside of Trading, which actually started, give you a little background. Where did that come from? Inside of Trading. It's a group. Myself and my cousin Joel Harrison run on Facebook. Got like 27, 30,000 people in it. I haven't even checked the numbers lately. Great community of traders, investors, people trying to make money, starting to make money, just trying to be in a room with people making money, and very experienced people consistently been making money for a long time. We got the whole range. We got millionaires, 7, 8 figure millionaires. I don't know if we got like no billionaires sneaking around. We might though. You never know. We got some thousandaires. We got some hundredaires. We got some hopeful people. Hopeful people who just are learning, right? So, regardless of where you are, that's where insider trading comes from. What I love to do, pull up the market, go live. A lot of gurus won't cover charts live with you. That takes a lot of skill and confidence to cover the charts live, to do the analysis live as it's happening. I would actually challenge you for fun. I don't know if you've been making money in this downtrend. I don't know what you've been doing, how you've been doing. I hope you've been doing well. If you've been struggling, I would encourage you to go to my YouTube channel, Being Noble, not just Being Noble. I gotta take that off of there. Being Noble. Go back, watch all of my live videos since December. I literally have thoughtfully, carefully, week by week, shown you what was coming. Not because I'm super smart or I'm got some special recipe. No, because I've done this for 20,000 hours. And when you do anything that consistently that long, you get really, really good at knowing basics and the advanced, right? So my superpower is reading the chart. You give me a chart, I can show you how to make some money. Futures, foreign exchange, options, doesn't really matter what it is technically. It really doesn't. So what we're going to do today, we're going to have some fun. I want to show you today, specifically, I've been kind of doing this because I like doing these. I like going candle by candle. All right, we kind of just pull up a chart. People love to throw up a chart and tell you what you should have did. But there's a value to walking you through, like bar by bar, candle by candle, right? This developing story that we call price action, which really just means, can you understand what people who are bullish and bearish think at the same time as these prices fluctuate? What happens when we hit a new low? What happens to bulls? What happens to bears? All right, when we bounce back up, what happens to bulls? What happens to bears? There's critical prices. Now there's all these technical indicators and tools and all this stuff you can use. I know. But at the end of the day, if you can just read a chart without anything on it and really just understand how people on both sides of the table are feeling and thinking, then you start to really understand what it is to be a trader. It's actually data analysis. A chart ain't nothing but data. It's just data. It's math. It's literally just numbers and a chart. That's all it is. It's data. All right. So I applaud you for being here, taking some time to, all right, power hour, last hour of the day, all right, before the market closes. All right. So before you hear that bell, hopefully today you heard this. All right. I want to make some money today. So let's dive in. Actually, matter of fact, before I do this, because I'm gonna play around with some stuff. I want to test this second camera. I got a second camera. I just got this second camera. Oh, okay. Yeah, that's a good look. That second camera. That's it's like cleaner. Y'all see that? It's brighter. Oh, that's a good look. I like that. I'm kind of getting like, even though these are like live podcasts, I'm still kind of like getting ready to like really per se launch for real, for real. This is just like fun practice, if you will, almost. And it's real. I mean, these are, live market, you know what I'm saying? I want to bring you value always, always, always. But I am testing some different things. So what are we gonna talk about today? Really quick too. Depending on where you are, let me know where you're from. If you're watching live, you can actually interact with me. All right. This is like literally probably like one of the world's only, and I would argue one of the best, because I know technicals, indicators, charts, the math. Not just the MBA and understanding business, But I got into trading like 12, 13 years ago, right? So you're not talking to somebody who just started trading because of COVID. It's a whole bunch of COVID traders and COVID gurus. What were they doing before COVID? Nothing. Nothing. Not making no money. Didn't understand the market. They just finally got sat their butt down at home, and then they started to think, I'm sitting here at home. I can't go to work or whatever. Made a little money. Next thing you know, they're a guru. Everybody's not a guru. Everybody's not a guru. So be careful about who you're learning from. Do some research on these people, please. Just go to their Facebook page. Go back 5-10 years. Just see what they've been doing. Just real quick. It don't take long. Just real quick. Real quick. Why do I say that? Because there's a lot of scams out there. A lot of scams. A lot of scams and scammers. But that's all I'm saying on that. So today we're going to talk about today's price action. I want to show you a few things. You can comment live if you have a question. Type in the question. It'll pop up. I can show it on screen. You can engage with me directly. I know you watching. If you are watching live, a lot of people, of course, watch these, after I post them. But if you are live, feel free to let me know what stock you'd like me to take a look at, or you could just relax. You can learn. I'm gonna do my thing. Today we're gonna cover 5 specific points. I want to talk about today's price action. Oh, matter of fact, let me do one thing real quick because I always forget to do this. I want to make these green candles, these bullish candles. I want to fill them up and make them green so it just is stronger, right? So the green and red you can see very clearly. Right? I know if you're watching on your phone, it's kind of hard to see the candles. So I want you to see them very clearly, very clearly. Man, I like this second view. I really do. That's a good angle. And it's clearer. See that? You see the difference? Just analyzing. Okay, today's price action. So I actually go back just a little bit real quick. This is NASDAQ. I want to go. Actually, I'll do this real quick. Just move this down. I'll come back. That's my list. Today we're talking about price action, but I want to go to the day charts for a second. And I want to start here to show you one of the most basic 101 things that I learned very, very early on. And if you're new to trading or you're a little seasoned or really don't know where you are, doesn't matter. The basics are always your concrete foundation. You build advanced skill sets off of understanding and having in-depth knowledge with basics. All right, I've been on this kick with just because I keep seeing a lot of different people on YouTube and all, I just pay attention to what's out there. I'm kind of rebranding right now. So I'm looking at a lot of competitors to people like me who offer courses, consultations, right? And really put a lot of time and effort and sweat equity. And I've sacrificed a lot to learn what I know to be able to actually organize it well, and teach it to you in a way where I just really accelerate your learning curve. That's all. Right. So that's why people like me, specifically, and I love educating. I love marketing. I love the creativity of it all. Right. So, right. You have to get over the idea of I want everything to be simple. You can't really keep things simple unless you have depth. And I know that's counterintuitive. I know that's so counterintuitive. I know it is. I know some of y'all like, what does that mean? Think about somebody who's like, yo, build a really simple radio. A simple radio? What do you mean build a simple radio? That's not simple. But when people want to learn about trading, they're like, yo, just keep it simple for me. Just give me like a simple system I can follow. I'm gonna be real with you. What a lot of people are really saying is, I don't want to do the work. I don't want to have to think really hard. Just make it so easy for me. All I gotta do is push a button and I'm just instantly making money. I've turned my computer basically into an ATM machine. I know we all want it to be that easy, but that's the lie. That's the fallacy. Right. And as somebody who, literally named Noble, I can't be the person lying to you telling you this is about to be some easy journey. It's work. It requires time. There's a patience to it, just like any profession. If you want to get into this money industry and actually learn how to do what I do, be your own boss, trade for your family, trade for yourself, whether you're single, married, right? I don't really care. Right? It takes some time, right? And unfortunately, people with that same analogy, once again, of make a simple radio. Well, guess what? You probably need to understand sound waves and how sound travels and transistors, right? You actually need some depth to create a really simple, basic radio. But people want to start with trading and just I just need a simple system. Okay, well, if you think you can really master from simplicity, it don't work like that. You got to get some depth. You got to get some depth first. Then you can simplify things. Right? Only people with a mastery can really simplify something. Right? I had to think about that. It took me like 3-4 months. I was just really thinking it through. I'm like, damn, what are all the things trader people say? All right. And honestly, a lot of people just lying to y'all if you knew. All right. You're going against some of the most sophisticated minds in the world. Every time you lose, somebody's winning. On some level, I'm literally, as a futures day trader, I'm literally trying to take your money. And who you think I care about you when it comes to a trade? My family, my money, my business, or you? Who you think I'm going for every time? I want to win every time. All right. So why do I say all that? I say all that because I was trying to draw these lines and get these swing lines up first. So let me make sure you can see my charts. Okay, you can. Cool. And then I'm gonna walk you through this. Somebody said, "Hey, Noble, you got the twin view on Noble 1 and Noble 2?" Yeah, I do. I do, Christy. I'm just kind of testing, just kind of testing. What about now? That's weird. Losing sound. I can hear myself. Y'all should be able to hear me too. Christy, you my eyes and ears right now. Can you hear me now? Can you hear me now? Can you hear me now? You hear me now? Oh, you know what? I forgot I could do this on my phone. I could look it on my phone too. So give me 1 second. You gotta troubleshoot this stuff. It's real. Sound went out. Okay. Let's see. Let's see. So input. Yeah. Okay. All right. I'm back. Good. Okay. I don't know what that is. What that was. Looks like I'm good there. Good there. Okay. Cool. All right. So I don't know what happened, but I appreciate that for you guys who are like, yo, I gotta make sure I can hear. Matter of fact, let me do this really quick too. Okay. Matter of fact, let me do this really quick too. Oh, that's weird. No, I can't do that on my phone. I can't hear myself in my phone too. Okay. All right, cool. Oh, Joel, yeah, you said check the red light. That's the funny thing. I got a new mic. Right? I don't have a mute. I can't accidentally hit mute on this one. It sound is linked to one view. Yeah, I'm thinking it's something, but that's the thing. This view is my DSLR, right? That's why it's so super sharp. It's my DSLR. This is mine. So everything should. I don't know. I'll figure it out. It probably it probably is something with the two views, but I don't know. Whatever. That's why all right, it's cool. You practice, you just and I keep saying practice, but it's like it really ain't practice. It's live. This ain't practice. Okay. So let's get back to the chart. So and let me know if somehow sound goes out. I appreciate you guys. Y'all know. Because Joel will be live sometime and I'll be like, yo, put the chart down, pull it right. It's like, because we can't see everything. So I appreciate that for sure. So what is this? Just basic pattern of what definition, golly, I was about to make a new word. Functionally, what the definition of an uptrend is. It's when you're getting a series of a high, a low, and then you get a higher high and then a higher low as the market makes these little pivots. right? We're pivoting, right? We're going as low as we can go, and then we get more buyers, more volume. We go a little higher. All right. So the market, right? We got in this period here. This was tough. This is the difference between a trader who really can't sufficiently make money and one who can. It's about recognizing when trends have changed direction, and it's not easy to do. It's not easy to call. It's not easy on some level. A lot of people can't do it. It's easy when everything's bullish. This is Nasdaq. Let me go back. Look at Nasdaq. Now look how long Nasdaq has been bullish. This whole 20 something months, it's been bullish. So yeah, buying every dip. All you had to do was buy the dip, buy the dip, buy the dip, buy the dip, buy the right, just buy the dip, buy the. But that's going to work consistently until the market environment changes. When we have enough of a pullback to truly start to go into a downtrend. When we go from uptrend to strong reversal to confirm downtrend. That process is what is going to keep most of you guys not being able to identify those three: uptrend, reversal period, confirm downtrend. Stop buying. You'll be going the wrong direction. 90% of this is direction. I don't care who you are, what you buying, go the wrong direction. If you're buying and the market is dropping, you losing. Now, if you trading options, okay, cool. Okay, maybe you're doing leaps. Maybe you gave it 6 months. Okay, cool. All right. But still, you're only giving it that much time because right now you know the direction's down, even if you subconsciously only know it, right? So here was where the flip happened. This is once again on a week chart, but right in here, once like I said, go back and look at what I've been talking about since December. This was a range. Ranges are tight. Ranges are when the market starts to say, bulls say, I don't know if I want to put money on the table. Y'all put some money up, and bears say, no, you put some money on the table. All right. Bears and bulls. All right. Both sides are they're a little bit more quiet. Nobody knows. Nobody's pulling, right? And this is when volatility slows down, when there's confusion, when there's fundamental as well as just reasons in the market for people not to be aggressive. We've been super aggressive for 2 years. And then we started to range. NASDAQ hadn't ranged like this for 5-6 weeks. What is this? 1, 2, 3, 4, 5. 5. We stayed in this little box for 5, 6, 7 weeks. We haven't done that. That was, if you didn't see that, I don't, you're gonna struggle with trading. If you can't see this range, 7 weeks, the market didn't go anywhere. If you were trading hard in a range, why? You can't trade hard in a range. And you really, even though, market was still bullish, right? It was like, okay, cool. Let's look. It was functionally still bullish. All right. It was technically was still bullish when we were up there. But when that period happens, for people who know and who just have more experience, yeah, the market can pull back. Yes, the market can easily turn into a downtrend. Are we in a downtrend right now? Yeah, we just made a new lower low today, which is why I'm doing this video. All right. And I could go back to those older videos, but I was walking you through. This is a range. This range is really important. You should have saw that. It should have screamed at you. Even if you didn't see that range, which you should have, you definitely should have saw this little candle. Look at this. This little candle right here. That's a weak candle. That little doji was screaming. I'm probably, if we get under the low, if price breaks back under the low, we're going to run right back down to the bottom of this range. And then this candle broke the range, went lower. So what does that mean? That means all the people who were buying, literally, you were trying to keep the market up. You were on the bullish side. Anybody who was buying from 10.25 all the way to 1.3. All right. October, a little bit of October, all of November, December, and the beginning of January. I don't care who you are. If you bought anywhere in this range, when this candle closed right here, January 10th, this little candle right here, I'm gonna put 2 boxes. Put a little box and make this yellow. Make this one yellow. All right, this was the breakout candle. This is the breakout, yellow. This is the breakout. Why? Because it's now underneath all of this. All right, so you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks where the market really didn't go anywhere. And this candle now at a price of level of 374. 374 is under all 11 of those weeks. All right. So you should read that as understanding anybody who was buying in the last 11 weeks is now losing money. Now, maybe they're not losing their shirt. Maybe they only losing a little bit, but price is lower. So as price goes lower, bulls are going to get more disappointed, more frustrated. They're going to have less hope. They're going to put less money on the table. As price goes lower, bears are going to get more excited, more aggressive, more ready to make money. And that's all that's happened. We had a long range. We broke out of the range. And now we're in a functional, technical, very sound, should be simple to see. We're in a downtrend. Why? Because this low is lower than this low. And this new low we made today, I mean, it's kind of sitting right there at the bottom. You could technically say, oh, you could argue and say this is support. We went a little bit lower. What do you see? You see a pattern, you see a downtrend. Classic downtrend. Here, classic uptrend. But in here, and this is man, I could teach a whole class on like just price action and trend reversals and ranges and dojis. All of the basics are right here. If this year is whooping your tail, you don't know how the basics now. You don't have the basics now. And I don't say that to beat you up. I just say that to be real. All right. Because everybody's looking for a system. Everybody's looking for the right, best, most dope, powerful indicators. But if we take all that off for a second, do you just understand what's happening? If I bought let me go back to that chart. Let me go back to that week chart. Let's play this out for a second. Just for a quick second, and I'm gonna move on to today. Hit my 5 points, and then I'm gonna be done. This week right here, the opening of that week was 375. In fact, hold on. Let me do two things real quick. I'll put a line here when this week started after that little breakout. Matter of fact, I'll put a line here, right? Because this was the week that went a little bit lower, and then this was the continuation. All right, so we got a breakout. That's ugly. If we don't bounce off this and go back up, all right. If we go lower, notice how I said here with this little hammer. If we go lower, I have a high probability of where we're going. If we break the low of the candle that came out of the range, high probability price will continue to drop. I'm not really predicting. All I'm saying is if this happens, then this should happen because this is how the market works. I know the basics, and the basics seem advanced to people who are brand new. They're still basics. They're actually basics and advanced. The basics become the advanced over time. Over time. All right. So I'll put a line right here. Right there at that low, that's a price level of 370. So all right, let's think about this. 370. I don't care what you were trading. And let's just think about it. Let's say you're trading options, right? Because I'm talking about stock. But I could be talking about futures, right? I could be talking about futures, but most people ain't trading futures, especially not like holding overnight like that. All right. So let me make this big. All right. So this 370. All right. So when this week here, right here, January 17th, 370, when price got to 370, guess what? Anybody who bought during this week, the lowest you could have bought during this week, all the way back here, the week number one was 386. You're losing. If you bought during this week, the lowest price you could have got, the lowest was 384. The lowest this week, 387. The lowest was this week, 392. You definitely out. You getting beat up. 389. Why would you still be in? You should be out too. The low here, 378, 377. This little candle, it made that little high, peaked up, came right back down. Right. So what am I saying? 370. When price gets to 370, everybody who bought above it, I don't care how long you gave your calls. I don't care how many shares you bought, whether it was 1 or 100 or 10,000, you're losing. And this is why downtrends happen. All right. It's a deeper understanding, and it's simple stuff too. Don't get me wrong. I ain't acting like this is like rocket science, but these are those basics that matter, right? So when we talk about reading a chart, I don't just mean when I say reading a chart, I don't mean you're like, oh yeah, this candle was green and this one was bearish and then it had a little wick. So yeah, I can read a chart. I know that this is a bullish candle and this was a bearish candle. Nah, that's not what I'm saying. When I say reading price action, like if I asked you, can you read price action? I'm not asking you, can you tell me red is down and green is up? A 4-year-old, a three, a well, 3-year-old you just talk to enough can tell you that. That ain't special. We talk about reading a chart. We're talking about, can you candle by candle understand the full story of what's happening and where we are? And really at a deeper level, what are bulls and bears thinking, and at what price levels matter, because somebody's going to start losing and somebody's going to start winning. And how are those price fluctuations going to affect the psyche and then the trades and then the volatility, right? So imagine here, you bought it, you bought some shares at 380. All right, you were just like, oh man, we're about to get this Christmas rally. I missed this little dip down here. I missed the dip. Oh, I had this little dip. I could have bought down here off of like this candle right here. Right? I could have bought this. Was a little pullback. Could have got in above the high of that week and ran right back up. Dang, I missed it. Okay, cool. I'm gonna buy above this little lowest can, right? I'm gonna buy right here at like 400. I'm gonna put a line. All right, you like, man, we gonna run right back up. All right, you like, we gonna run right back up. All right, put a line right here. All right, you like, we gonna run right back up. Now you got in at 470. I mean, not 470, 400. If you got in at 400 and we go all the way down to 370, all right, what's gonna happen? What are you thinking? 370's down here. All right, you got in at 400. Maybe you got in at 390. Hell, maybe you bought at the high, assuming we were gonna keep going higher. You got in at 405. Maybe you actually bought off this support, right? Off these bounces. Maybe you got in at 380. When we get to 370, none of that matters. Everybody who bought is losing. All those people are losing. Higher probability they're going to exit. Right? They're going to be less hopeful. They have less money. It's like nobody has unlimited funds. Right? You only can trade with as much money as you have. Right? The more you lose, the less you'll be trading. All right. It's a short career for some people. So we went lower, stronger low. And for several other reasons. That's weird. My camera kind of did a little blinky blink thing. Okay, that was weird. Whatever. All right. Here's the funny thing. Look at that. We dropped from 370, so that was a key level, key price. We went under. Right. For my dip lovers, this was the dip. It's a hammer candle. It's I'm not mad at you if you saw this hammer and said, I might get a little move back up. I'm not even mad at you here if you were like, I think the market's still bullish. But when we went right back up to 370, this same area we broke from, we didn't bounce off 370 for no reason. This was the key. This was a key price level, and we took it out. And the market loves to do this. It loves to, like, what used to be support will become resistance when the trend flips. So maybe you missed the range, and then maybe you missed the week, and maybe you missed the breakout. Maybe you missed the drop. Maybe you missed the dip. Right? It's like I'm just going across the chart. It's giving us logical reason, rational reason to know that where we are now was coming 7, 8, 9, 11, 10 weeks ago. But could you stay neutral, or did you have the belief that this is easy and markets just go up and I'll just buy the dip? As a trader, I ain't talking to investors, to be clear. I'm talking to traders. All right. Went up to 370. Then what happened? Got to 370, had a little range. Then in here we had a range. Look at that. Ranged in there for like 10 days. Just didn't go anywhere. Let me take 370 off. Basics. These are just basics, right? Just basics. Let's do this. Let's draw a little trend line. Let me just connect this swing high. You could have connected this high We pulled back up here, got a little pop back up. So yeah, that's the thing about trend lines. Trend lines, you kind of have to adjust them, right? So you would have initially had a trend here, right? And then this it popped up, but we still ended up going back lower, right? So I personally, if I was you, right, I would go back and kind of adjust to like right the highest of that move, which was here. All right. So you got let me take this off and then let me circle these, right? So we have this little bounce back. Oh, this break at 385. This was after we broke we broke out of the that range. Got a little bit of buyers and then exhausted. Didn't have enough buyers. Came right back down. Bear says we smashing. Seven hard days. 7 hard days. No bulls trying to fight that off. 7 days. The market just went down, 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 down. Seventh day, bulls get some confidence. It takes 4 5 days to get outside of this hammer, buy the dip. I know some of y'all was nervous if you bought that dip. It did push up to 370. And then we ranged for about 9 10 days. Market didn't go anywhere. Ugh, it's not good a sign. And then it did the same thing. We ranged and then dropped. Ranged and then dropped. So there's a little range in here, and we dropped. There's really a little range. Look at this. Right in here. It's the same. For 5 days, we didn't go anywhere. And the highest we got up to was the exact same trend line that you literally could have had this line here drawn from February 10th. February 10th. Let me get rid of this box so you'll see it clearly. And this high right here and this high, those two highs created this trend line. We bounced perfectly off of that line, which was on your chart or should have been on your chart 2 3 weeks ahead of time. Even after this really monstrous bullish day. And price slowly over 1, 2, 3, 4, 5, 6, 7 days, we went right back down to the low. Why? Because we're in a downtrend. We're in a downtrend. Will we get out of this? Yes. Months from now, it's going to be a whole different story. Next week, I'll be telling a different story. 2 weeks from now, it'll be a different story. I don't know what's coming. Nobody knows. Could we go lower? Yeah, we can go lower because we're in a downtrend. Can we go higher? Yeah, we can go higher. We can be back to new highs in 2 months. I don't know what the market's going to do. All I know is if this, then that. If this happens, then I'll do that. But if this happens, I'll do that. Right? So if certain things don't happen, I'm not buying no long-term calls right now on this market. I'm not buying no short-term calls right now. Why would I? Well, I'll take that back. I'll take that back. Yeah, take that back. Long-term meaning 6 months to a year, right? That's on you. I ain't really here to tell you about long-term, right? And I'll take that back. The further out your bias, right, your analysis is, right, it's just if you're an investor and we're talking investing, yeah, you're bullish. I get it. You buying 2 year calls on a lot of stuff right now. I know people doing that. I get it. I get it. I ain't mad at you. And I'm not mad at you. I'm not. But I do just want to make the point. Right. So let's go to the day chart. And let's go here. Let's go here. This should be fun. Should be fun. Let me go here. I'm gonna tell you what I'm going to show you before I show you. And I'm going to show you. Let's hunt for some bears. And what do I mean by that? I want to show you when you should have rationally today, if you were intraday on anything, futures, options, whatever, started to say, okay, I know the market's bearish because I know the day week is down. So I want to kind of see. I want to really go with the trend on a 15-minute chart. I want to go with the bears. I want to look for bears because I'm a bear today. I'm looking for. I want to match up my intraday with what I just clearly showed you with the day and the week chart. Pretty simple. Pretty simple. From Friday, what happened Friday? Dip, drop. What happened overnight? Drop. So we were down, right? This morning when you woke up, market was bearish. All right. There's a couple ways to do this. Wait, hold on a second. Hold on a second. Trying to think which way should I do it. I'll do it this way. Do it this way. In this ongoing, I could literally do this for the next 20 years. Just continue to write week after week, pull up and show you, some intraday, some week to week. I'm using the same thing. I literally be 10 years, 20 years from now using the same stuff. I just showed you, I identified what? Breakouts, ranges, doji candles, hammer candles, which are reversals, dojis, which are signs of confusion. But all that's 101 stuff. All that's 101. You cannot become an advanced investor if you don't know all these core basics. The indicators are just to help us to see it faster. But I want you guys to understand what you're doing. Right. That's why my and they should be longer. That's why my classes are, 6, 7, 8 weeks live. I got 2 live classes happening right now, a live futures class and a live 7-week. I teach live every week, futures and options. And why can I even teach futures and options? Because it's all the same. It's price action. You can read a chart. Forex, crypto, stock options, futures. It's all the same to me. Prices only can go up, down, and range. That's it. If you're an advanced master guru trader, you literally should be able to trade anything. Anything. So I teach them both because I'm like, well, a lot of people love options. And a few people want to learn futures. It's a little more advanced, but it's the same core technicals, right? So let's go here. I'm looking for bears at the beginning of the day, but I'm going to do this. I love to do this. I'm going to go candle by candle. So what happened in the first 15-minute candle for today? Oh, wait, let me go back. Just this first candle. Because this is what's happening live. Like, right, as a trader, you're seeing this play out candle by candle on whatever time frame you're looking at. And nobody knows what's going to happen. Biden could tweet something. I mean, he ain't Trump, so maybe he don't have that level of power, but he's still the president, right? He could tweet something, the market move. Right. So you could have an explosion. We could have an 8.9 earthquake in Los Angeles or something. Market reacts and drops. Ain't nothing you could do about it. Right. So there's literally a limitless amount of things that can affect the market that you cannot predict. So it's out of your control. Got to give up control as a trader. Got to give up control. The best technicals in the world don't mean you're gonna make money every time. You're going to lose. Got to learn how to lose like a winner. All right, that's the key. How do you lose like a winner? Hold on. So I put my Bulls hat on. One, because I just love hats, but this first candle was bullish. First bar was bullish. Right? Why do I say that? Because it pushed up. It pushed up. And if we talking intraday, and let me do this for a second. Let me just put one thing on my chart. One thing. I want to put one thing on my chart real quick. I give y'all some gems. Try to give you some gems. I want to try to give you some gems. So I'm putting one little thing on my chart, and then I'm going to draw this line. This line here is, I want to draw a line at the high from the pre-market because I want to know where that is. I want to draw a line at the second little high from the pre-market. That's it. I'm going to draw those two. Now you can see today. You already can see what happens, right? So okay, cool. But I was trading today. I was short today. Right? You see, the market was it was short. It was bearish more than it was bullish, right? And then what I added to my chart, these are called pivots. If you're trading options or futures and you don't have pivots on your chart intraday, you're just making this hard. Making this harder than it needs to be. Right? And here's why I say that. So let's go candle by candle real quick. First bar, pop back up. Trend is down. We're pushing up. But what do I expect? I expect us to get to this pivot, this little purple dot. I expect price to go there. Why? Because it's very, very close. If you do a little bit of research on what pivots are, they just give you levels to know where the market will find support and resistance throughout the day. Based on previous day high and lows, I've been trading for a minute. I'm telling you to put these on your chart. At least look at it. All right. So first candle, and think about this for a second. This candle, bullish candle, right? This high we got here. So technically, when price got here, right? Anybody who was buying all the way back here, right? You're buying in this candle, you're now losing this candle, right? Anybody who was like, and I'm on NASDAQ. Oh, I should probably go to I mean, it really doesn't matter. I'll show you. Let me flip over real quick the futures. This is the ES, which is the S&P S&P 500 futures. I could show you the S&P, just the normal S&P or NASDAQ. It's the same pattern. I'm just showing you futures to show you what I teach you and talk to you about these concepts. Whether we're talking stock or futures contracts, it's the same stuff. It's the same stuff. Now you got to have more money, more skill set, more right to trade options and futures because it's leveraged. You don't need to be in futures for 25 days to make money, right? You don't get into futures because you're trying to make slow money. You just really don't, right? So, candle looks a little different here. I know I'm starting the day over. I am real quick. First candle dropped and then we pushed back up. All right, so that's So we actually pushed down first, but we're in a downtrend. So I don't really like that. As a bear, I don't like that. As a bull, I like that. I like to see that momentum. I want us to bounce off lows. I like these long wicks. Go up, 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 up. All right. So I want to show you bears and bulls, both sides. Right. Next bar. A little, it's not a doji perfectly, but it's inside. All right. It's inside of right this candle. So that's a little candle of confusion. For 15 minutes, bulls push, bears push. We equaled out at equilibrium. Equaled out at equilibrium. We balanced out. Right. When price doesn't go anywhere and the candle basically closes where it opened, that's equilibrium. All right. That's nobody really pushing the gas hard on either side. That's tug of war where the little flag ends right perfectly in the middle. That's all that is, right? So we're now ranging inside of this candle, which means what? If we can get above here, if we can get above this first candle, then where should we go? Well, we probably at least gonna just run back to this high. All right, so but is that am I trying to make money right there? Is that a trade? No, I'm not saying that. I'm just talking through the price action mechanics. And I got a pivot up here. Got a pivot up there. If you know what pivots are, they're like magnets. So the higher we go, yeah, we probably just gonna run to a pivot. I'm thinking that without even thinking. That's just 101 basics. Right? Over time. Over time. Breakout. Got above this little range, right? So think about that now. This candle, right? This candle, we're here. We closed here. So anybody who was buying futures early in the morning, you were buying 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We just took out the last 10 candles, 15-minute, whatever that is, going all the way back to 7:30 in the morning. So anybody who started buying somewhere in here at 7:15, you started shorting at 7:30. Here you're now losing. You're losing some money. Losing some money. The higher we go, it's just like a baton being passed back and forth. Right here, when we got here, first 15-minute bar, market is trying to figure it out. 9:45 to 10, didn't really get a move. 10 o'clock, what did we do? We popped up. But this is kind of counterintuitive. The market is pushing up, and we're probably going to get to this pivot because we just love to run the pivots. They're support and resistance areas, right? We also had the high from the pre-market back here. So it's like, okay, yeah, we might run back to the high. Dang. But the trend is down, which is where I started. The trend is down. So we're looking for bears. Bears not in yet. Nope. I didn't get excited yet. I didn't like any of this. I'm like, oh, we got one of these days. We're gonna try to push up today. All right. Smaller candle just means this move kind of slowed down. Didn't get as much volume. Okay, cool. Just kind of slowed down. Still above all of these last 10 candles, though, right? What happened on the next bar? A doji. So now you're getting, once again, we're getting confusion. This little cross, it's a sign of confusion. Bears pushed a little bit, bulls pushed a little bit. We equaled out. We opened at 422, 42.22. We closed at 42.22. Could go either way. All right. But starting to get some bullish activity, right? Bam. Ran directly to the pivot. Which, once again, from 9:30, I already knew that this was a very simple, easy, logical place for the market to run to. Very possible. Actually, very probable. The closer we got there, once we really got above this candle, it was like, yeah, we about to run to the pivot. Probably about to run to the pivot. All right. Let's keep going. Little pullback. We hit that pivot. The reason I want you guys to put pivots on your charts, one, because we run to them because they are these key areas of support and resistance, but we also a lot of times will reject from them. So now I'm like, I want to see if price can get through this pivot. That's what I'm thinking. If we get above this pivot, we're probably going to go up. Probably going to be a bullish Monday. Mondays tend to be bullish anyway. You're getting a functional, or you're getting an uptrend. What do I say? You're getting an uptrend, meaning if we just looking here. All right, look at that. You're getting higher highs and higher lows. So trend change direction on the 15-minute. It's bullish. All right. But this pivot, though, pivot's important. Push back down. Okay. Now here I'm getting a little excited. I'm like, okay, go lower. I want us to close under this big green candle at 10. I really want us to take out this one at 10 o'clock. Because this candle at 10 o'clock was the one where a lot of bulls started to assert some dominance, started to take over the market. Then we got a little pause, and then we got some more bulls to get in. Right, so it's just we got a little more volume. Market pushed up. Right, what happened on the next candle? We're pulling back down. So this pivot now held. We ran up to the pivot. We sat there for just a second, and price is rejecting off of this pivot. Doesn't mean we're in a downtrend yet, or back to a downtrend, but it's good. It's a good sign. Good sign. I'm feeling better. Feeling better. Why? Because this candle, we just took out this candle. Anybody who bought, think about that for a second. Matter of fact, let me take all this stuff off my chart real quick. Anybody who when this candle closed here, I'm gonna just draw a line straight across. All right, anybody who bought up here or buying up here, buying during this candle, buying at 10, 15, depending on when you were buying at 10 o'clock, we came all the way back here, right? So some of these people who were bulls just got out. For sure they got out because price is pulling back. All right. And what I said I liked was this. I like that we closed. This candle closed under this bullish candle. But we still got this one. This is really where this is the bullish candle of the day. If we stay above this all day, we're gonna be bullish all day. Even if we don't really go anywhere, but we just stay above it. We're definitely not bearish if we don't get below this candle. I like that we took this one out. I like that we got rejected off this pivot. Hopefully we'll go back into a downtrend. Strong downtrend. All right. So let me throw this other stuff on my chart real quick. Dang, where does it go? Where did it go? Wait, hold on a second. I gotta find it. That stuff that I wrote, did I take it off? Dang, maybe I took it off. It's cool. Whatever. I remember what I was gonna do. Somebody said then comes a downtrend. Then comes the downtrend. Not yet. Not just yet. Not just yet. Just walking through. Okay, cool. So we got, we took this candle out, but this is really right. If you were a bear today, a patient bear, none of this. Don't get me wrong. Unfortunately, a lot of people will will change direction, or because you may have started right. I'm starting this day showing you that I had a bearish. Oh, there we go. Market just closed. Had a bearish bias because why? Because the market is down as a whole. Right, we were down over the all right. Made some new lows, right? Actually, we really just kind of ranged all night, to be real. All right, just we had a big range. Right, kind of just dropped, went back up, came back to that low right off the morning, pushed right back up. All right, so that's why I said my bias, right? Longer term bias, but as a really as a like day trader, and think about it, all day traders do is we're just able to navigate and bounce back and forth, reading price action, understanding what bears are, being a bear or being a bull faster than the average person because it requires more information, more time, more experience. That's all it is. It's faster analysis. You got to switch from bullish to bearish faster. So you have to be able to identify when trends change, when they end, when bears are getting weak. You got to be able to read price action to make the faster money. That's the equation. The more you know this stuff, the more you can make money. The more financial potential you have because you'll see these moves clearer. You won't get faked out. You won't be listening to all these gurus who don't know what the hell they're talking about. You'll be able to purely look at price directly for itself, at itself, right? So, next candle pullback. This is great. Now I'm even more excited here. This is a really, and let me put a line here. There's a reason. I did this really quick, just using all the tools. I'm gonna just show you some different stuff, right? I don't often talk about Fibonacci. I still use it. I still pop it up real quick. It only takes 2 seconds. All right. So when we made this move to this pivot, and literally when we hit this high, you know what I did? I put a Fibonacci on here and I said, where's the 50% retracement of this entire move? Right. Now I use some more advanced indicators. I can't like teach you my whole strategy right here live. You know what I'm saying? But if I just go to making where the 50% retracement was from this move, right? Matter of fact, let me do it this way. I'm gonna take the rest of these off. I only want to show you where that 50% is. I'm gonna take all the rest of these off. Then that was right here. And why is that 50% critical? Because I know the larger trend was down. We ran up to a pivot. We couldn't even get back to the high from the pre-market. Those are sign, right? We closed under right this candle here officially. All right, this candle closed under this highest bullish candle. I love that. I want that. With prices pulling back to where all these bulls push the market up anyway. And the 50%, literally, as a matter of fact, when I say 50%, what do I mean when I say that? This is what I mean. I mean, from the high to this point right here, if I double that, that's the same exact, right? So this is 50% and this is 50%. Right. So what happens when price pulls back 50%? When today was supposed to be a down day anyway, because the trend is down, but people are still buying and you have these little fluctuations, right? So the day trend, which I started with the day and the week, is down, but the market started going bullish, which doesn't align with the longer trend. So maybe this, right? My thinking is already maybe this move up is just short lived. Right? Because it's not connecting with the bigger trend. Now, if we stay bullish, yeah, we stay bullish. The pattern stays intact. All right. But can price get above right now this blue candle? I mean, this candle here where I have this box. Matter of fact, I'm gonna make it yellow. So you always know like where I'm at right now. This candle, this candle with the yellow, right? I'm actually hoping we get back down here into this 51 area. We get down here, it's probably a done deal. We're going back to the low. Because you just now effectively got 50% price pullback 50%. So any bulls buying today, if we get down, like the lower we go, more bulls are going to exit as more bears start to get excited. What happened with the next candle? Oh, look at that. Look at that. This was the right. So this one, right? This was the one. But this one, why is this one, right? Why am I so excited now as a bear about this one? Right, this one. Why should that one have gotten you excited? Because of this. Because we crossed the 50% level. We crossed the 50% level. And if you look at where this closed, it closed under, pretty much under the body of the most bullish candle of the day, where most bulls, if you got in bullish and you rolled it up, right, at worst, really at best, I probably should say, at best, you would have your stop loss down here. So you made some money and then you watched it come all the way back to where you, right? The candle you got in, if you got in this period where most of the bulls for the day got in, we just took that candle out. So most of these people are probably out too. And the market still could have went back up, but it has to break the highs of some of these candles to go back up. It has to go right to get higher. You got to break the high of this candle. Right? I'm constantly analyzing and paying attention to highs and lows. That's really all this is. All right. As we went from uptrend, ran to a pivot, couldn't break the high. The pivot held firmly, literally right there was almost the high today, 42.37. If I go back to NASDAQ, look at NASDAQ. Oh, that's why I had it. I had it on NASDAQ. This is look at NASDAQ. Look at this pivot. We hit this pivot perfectly. You should have known exactly where the high for the day would be because we hit it, we touched this pivot perfectly, and price started to instantly come down. It's doing that for a reason. But then we got this big green candle. So I'm gonna go back. We'll go back to the ES for a second, right? So those pivots, I'm telling you, incredibly helpful. You're talking to a trader who knows what the hell he's talking about. Like I'm not telling you this stuff, for no reason. All right, next candle, small candle, all right, near the bottom, hammerish. Some people would see this and be like, "Oh, we should go back up. We're gonna bounce off support. We're gonna bounce off support from down here." Oh, and we could have. It's possible. Could price have gone back up? Yeah. But you got to think about the story. What happened today? Bulls surprisingly pushed the market up in a down market, in a market that's literally it's bearish. The longer term view is it's bearish. The day chart and the week chart are bearish. We're making new lows. We had an hour, one good hour from what is this? From 9:30 to 10:45. We had an hour and 15 minutes of bullish activity. And then we pulled back and got 50% of those people out, and then we dropped even lower. And then where did we go? We ran right back to the low. Right back to the low. Right. But up here, as this started to happen, I'm like, okay, we perfectly hit the pivot. And really, this candle here, right? So this one, yeah, we hit the pivot perfectly. That's a little bit of a sign. That's part of the story. Then this candle happened, right? Which is taking out all of the bulls of this candle. All right. We crossed our 50%. So that's starting to do what? That's starting to take out some of the bulls who got in here on the most bullish candle of the day. We don't really have anywhere else to go except for back to the low. And then what happened at the low? We ranged for about a good 45 minutes. Market went lower. 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 Market right. That was it. That was the whole story of the day. That's the story for the day. And here's the matter of fact, let me look at some comments for a second. Oh, that was Joe earlier. Facts. Somebody said down, and then somebody said, I've seen it a little different, but your point of view is right on money. That's the key also to determine bullish or bearish, possible from a bullish or bearish activity, possibly at the right point from analysis. Yeah, and here's the funny thing. I'm not really showing you exactly what I see because I have to teach too much. This is like me 6 years ago. Right. What I actually do is way more advanced. I saw this move coming down as clear as it made perfect sense. Now, time and years of experience, A, B, and C, right? But I tried to walk through some of the core pieces of it, right? And you can apply this stuff really to anything, right? 'Cause think about what I said here, right? From the beginning of the day, I had a longer term bias, even though I'm still gonna trade what the market gives me. All right. This long here, this move up, I actually didn't take today specifically just because of risk to reward. It didn't give me, right. I got a homeboy, man, amazing trader. My guy B. Shout out to B. Um, we've really gotten to just sharpening up things. You should be able to grade. You should be able to grade your trades. What I mean when I say grade the trade, grade the setup. Right. What's a A setup? What's a B trade? And then what's a C trade? If you don't if you can't define that, and it takes time. I'm not saying right. So once again, you're talking to somebody who knows what he's doing at a professional level. But you should be able to grade a setup and say, here's what I see, but is this a A, B, or C type of trade? A setup to me has a risk to reward of 5 to 1. Right. A B is lower, but it's at least 3. If it's under 3, it's 1 to 1, 2 to 1. That's a C to me. I don't really want to take that trade. I don't want to study with C students. Right. I don't want anything average in my life. A C is average. So do I want to take this C trade? Not really. I'll pass. And I'm cool with it winning big, just taking off, totally just cruising through that pivot. All right. Why? Because if the market stayed bullish all day, guess what? I still get a pullback. We probably get above the pivot, pull back, touch the pivot, make a little dip, right? And go back up by the close. Right. So it's like, and there's a patience even there, right? Once again, I skipped that bullish trade. There's a bullish trade here that I can't really show y'all. But that move to the pivot, I love. I just didn't take it today because I didn't like the risk to reward. I didn't like the risk to reward. The setup on the downside. Oh, matter of fact, let me show y'all this real quick. Oh, check this out. Check this out. Futures, a little bit different, but we perfectly went to this pivot, and then the market all day didn't get there, but it literally reversed from a pivot and went all the way down here to a pivot. All right, so we opened at 41.85. We ran up to 42.4. What was that? 40. We went 65 points up and then dropped from 42.40 down to 41.50. Went up 60 points, dropped almost 120. Just say 100. Right. So even this, once again, the bigger, better play, right, was the bearish side. But we already knew that if you had done the analysis, even as a day trader, just to know what is the longer term, what's the bigger picture? Because everybody's not day trading. Everybody ain't day trading. Most people aren't day trading. But if you're swing trading, day trading, futures, options, or both, put the pivots on your chart. It perfectly called the high of the day. Was not rocket science. Not at all. On some level, you could almost say you knew where the market was going. And you did. And I did. Now, I didn't know if it was going higher. I didn't know if we would even get to the pivot, but I knew we would once we got this candle, right? This candle right here. I'm gonna go back to it. This candle right here, 10 o'clock candle. We're right there at a pivot. You know how many times I've seen the market make a move and start to go to a pivot? Probably like 1,000 times or more. All right. So I'm saying that, giving you literally years of, feedback with put pivots on your chart. They only help. I'm just trying to help you make some money. And like I said, NASDAQ today, it was a high. The high today was a pivot. It ran right to this pivot. Ran perfectly to it. And it came back down, broke through the low. There's another pivot down there too. Let me put this third pivot on my chart, S3. Look at that. Right. And the funny thing about these pivots is this pivot here, this red one, this is actually R1. Right. It's literally called R1. What is R1? Resistance 1. The first level of resistance where price should reject. Should in a down market go up to resistance and drop. And that's exactly what it did. Exactly what we did. There was one or two other things I wanted to show y'all real quick. What else was on this chart? Oh, okay. Fibonacci over day, over bullish bar, breakout from range. Okay. I see what I was doing. So there's a couple things, right? Just as I finish this off. I told you guys about Fibonacci, and I was like, hey, you could have just kind of put it up here to be like, man, where's the 50% area? 50% was right here. This candle, key candle. 50%, you could almost say 50% of the story for this, right? This candle. But it's really this candle. So yeah, let's do that. Let's adjust this Fibonacci and not put it over the whole day. Let's just put it over that candle, right? Because this was really from the low of this candle that made the bullish move. If you're a smart bull, you had your stop somewhere down here under the last swing low, right? This was the candle that was giving you hope if you were a bull. Please stay above this. I know we're going to stay above this. Please stay above this. Please stay above this market, right? And the 50% level was right here. I'll make it gold. I'm gonna make it thick line. It was right here. So really think about that for a second. What candle closed under? I'm gonna do it this way. This will be cool. This is a better way to show it. Better way to show it is this way. All right, so here's that critical 50%. Based on this candle itself, this most bullish 15-minute bar of the day. First 15, we just kind of pushed up. Okay, doesn't mean we in an uptrend. Second candle, pull back a little bit. Ooh, higher high, higher swing. All right, so if we were to look at a smaller time, it's in an uptrend. It's in a small, very small, quick little uptrend. All right, push perfectly to a pivot. Rejected off that pivot. I'm paying attention to that. Where's the 50%? This candle here. All right, this candle 50% was right there. So I actually, if I got a little bit more advanced in my analysis, I would really like slowly peel back and say, this was the one. This was the one you should have been watching. This 1030 candle. This 1030 reversal. It started to kind of move for the day, right? Because all these bulls got out. We tried to push back up one more time. We came right back under. And notice this candle and this candle. All right. You literally could draw a box directly under it, under both of these. And when this candle confirmed, right, so this was like the trigger. Ooh, bears are getting excited. Ooh, man, we should break. We get under this. All of these, they getting out. We're going to be back at this low. Right. We pop back up. All right. Bulls tried. Could not even get to the same high. Bad signal. Pull back down. Ooh, bulls are getting weak. Why? Because we pushed back up, but we couldn't go higher than before. How do you know a student in a class is starting to slip on his grades? Because your last test, you got 85. This test, you got 73. You didn't go as high. You're not studying. It's the same concept. Your last grade was higher than right. Same with the market. We went up to 326. Pretend it's a car. I don't know how you know the car, the engine is getting worse. I don't know. It was hitting 326 miles an hour easy. And then on this test run, we only got to these numbers are real close. So that's 326.50 and this is 326.30. So those are too close. Let's go back to the student metaphor, right? You got an A. You got 95 on the quiz. And then this quiz, highest you got was not as high as you've been. Lower performance. It's telling you something about the bulls. Doesn't mean we're going to collapse, but once again, if we were going to really establish a strong uptrend for the day, we would have had to break this high again. When this move happened and we came right back down, that was even just more confidence that we got less logical reason to think the market is going to go up. This candle pushes lower. Now by here, you got to know, come on. We have nowhere to go. We have nowhere to go down here. Right to the low. Sat at the low for 15 minutes. Went lower. Right. These two candles here. Right. Check this out. These two candles right here. Small range. Why do I call them? Why was I saying this? Why am I saying this is a range? Right. Because we're inside of this candle. All right. So I don't even really pay attention to these two. All I care about is this one. Did we go under this candle? Yep. Dropped under that candle too. Market just selling off strongly. Honestly, depending on when you got in as a bear and whether this is a 1 minute chart, a week, right? Depending on what trade we were talking about. For a second, forget this is a 15-minute. This is the type of move where you really can relax and stay in it. Why? Because we didn't break the highs of any of these candles. We didn't break the high of this candle. All right, think about that. This candle right here, we didn't break that high. Market went lower. We didn't break that high. Well, this candle went lower with range for a second. Oh, dropped lower. Well, if I was, let me capture a little bit more profit. Oh, dropped again, new low. We're not breaking any highs. That's the only way you can ride these trends. And you don't always get this. And then down here, When we finally had a candle here to break the high of one of these previous candles, we started to range. And for the rest of the day, we didn't do anything. Makes perfect sense. It was a big move, huge move. Huge move. People start taking profit down here. Right. So, yeah. Yeah. Let me put some music on.
Told me to
Oh, wrong sound.
told me to tell you.
My mom told me to tell you. I ain't gonna even play that. My mom told me to tell you to study these charts, man. Make sure you know what you're doing. Don't approach trading as approach it like it's a profession. Approach it like it's something that can truly change your life. You know, get educated. You got to have the pay these, you know, what virtues do you have as a trader? Like, what are your like trading pillars? You know, for me, one of those is patience. I'm kind of playing around with these right now. Right? One of mine is patience, right? I really have learned over the years to be patient. Everything pans out. You don't have to take a trade. It's okay. The patience alone, and sometimes just observing, especially in the first 5 years you trading, you know, you don't have to trade every single, you know what I mean? Like, you still should be learning. I got one student, shout out to, I ain't gonna say his name. He knows who he is. He sent me about 2 weeks ago. He was like, bro, doing really good. He was like, I'm profited on like 6 out of my last 8 options trades. He was like, most of them were pretty fast for like 2 days. They were all puts. I said, cool, good. Market is down. And he also was like, maybe he had like 12 trades. Still was winning most of those, but these are stocks he's not trading. He was trading them on paper. I said, you're gonna be all right. Because most people will not, if I told them to. You wouldn't actually take live trades with real money and take simulated fake trades on paper because of ego. Why am I trading on paper? Because you could learn about some other stocks. You could see the patterns a little bit more in those. You could practice even more by trading other stuff, even though you're making money over here. Trade on paper and live at the same time. That's what people who want it do, because it increases your learning curve. All you do is learn more. All you do is learn more and faster than the person who just takes their normal trades live. If you're trading on paper and you're trading real money, all you're doing is learning faster. You got to figure out a way to accelerate the time. That's what this is really about for most of us, if we're honest, right? We didn't learn how to trade growing up. Most of us didn't know anything about investing. The schools don't teach it. The colleges don't teach it. I have an MBA. I was making 6 figures. 2008, I was making 6 figures at Bank of America. And I didn't know none of this stuff. Because schools and universities and colleges don't teach it, because they don't connect with real traders who actually can connect this to the business level curriculum. Moving averages, I learned in a forecasting class. That's why I love moving averages. I get it. Brand managers use regression analysis, same tools. Moving averages, standard deviation, volatility, Bollinger Bands, Keltner channels, TTM squeeze. It's all volatility. It's standard deviation. It's statistics. But when I was learning statistics in undergrad and in grad school, they never connected. You can use this to make money in the markets. Never connected the dots. Somebody said that used to be me. Now I listen. That's what's up. That's what's up. Used to be you. Now you listen. So I'm gonna hit y'all with a few little quotes. I'm gonna hit y'all with some quotes. I know you want to win. Right now, it's been a little tough simply because the trend direction has changed. That's where I started this whole talk from. 22 months of bullish activity. Woo, let's go. That voice was too high. My voice don't even go that high. Let's go. Right? That's more me. Right? Market gets choppy. December, we're not getting this Christmas rally. Where's the Christmas rally? Where's the Christmas rally? Christmas rally didn't come. Ranges got taken out. We're starting to break lower. Oh, are we going to go lower? I thought, right? Market went lower. Trend line, ran up to the trend line, popped back up to 370. All basics. You literally could have walked through these last few quote unquote tough months. And I specifically only showed you NASDAQ. Why? Because if you can at least just get good, right, with just understanding and loving NASDAQ or the S&P, it's telling you about every other stock you're going to trade. All right. So you want to focus on the indexes, do the analysis on the index to get the broader, bigger picture. NASDAQ is 100 stocks. Why would I do the analysis on 7 different stocks first before doing my analysis on one ETF that literally is a basket, a portfolio itself of 100 of the best stocks in the world? It don't even make sense. It don't make sense. It's called a top-down analysis. That's all it's called. Start with the top. Start with the big, broader view. Right? Because everything I would show you, if I started pulling up stocks right now, everything I would show you is down. NASDAQ is down. S&P is down. Everything down. Except oil. Y'all know oil is up because you know oil prices are higher. All right. So I'm going to hit you with a couple principles real quick. Here's what Kobe said.
It's in the moment. So you have to live it. And when you practice those things, you become better at it.
You got to practice what I just did for you guys over this last hour and 15 minutes. You got to do this on the weekends. You got to do this for your boo, your husband, your wife. Teach somebody. Get somebody to sit down and walk through price action with them. If you don't spend the time, if you don't practice, I don't know what you expect to do. Here's what Jordan said about winning. This is my attitude.
I'd do anything to win. You know?
He said he'll do anything to win. So here's a question. Ozark. That new Ozark drops. You know you should be studying some charts because you really been putting in too much time this week. Ozark drops. Do you binge the next 7 episodes or do you want to win?
I'd do anything to win. You know?
Might have to sacrifice that. Your account's down. Maybe it's up. Friends ask you to go somewhere for some reason, but you know in the back of your mind, you know you really need to put more time in. Do you go with your friends or do you sacrifice?
I'd do anything to win. You know?
There's a sacrifice that comes. I'm sorry. You don't get to do everything in your life. We've sold people this thing. I want to live my best life. Like I can do everything I want to do. No, you got to sacrifice something. I'm sorry. I don't get to do everything. I literally spent the last roughly of this 13 years. I really spent like 10 years of my life. I sacrificed 10 years to learn this because I knew what it would do for the rest of my life and the next generation of my family to come and my current family, which I'm starting to kind of like, I got a plan on, kind of making sure everybody, you got to sacrifice something. What you going to sacrifice? The market will do you like this. You got to have this type of attitude. Ali had the right attitude.
I have wrestled with an alligator. I done tussled with a whale. I done handcuffed lightning, throw thunder in jail.
Come on, man. Come on. And you ain't got to be a poet, but that's Ali, man. You're going to fight with this market. You're going to wrestle with it. I love that one. That's mine. And when you get confident, then you can get aggressive.
I'm the best ever. I'm the most brutal and vicious and most ruthless champion there's ever been.
That's Mike. That's Mike Tyson. You're hearing, why am I playing these greats? Because I want you to hear how greats think.
There's no one that can match me. My style is impetuous. My defense is impregnable.
He said my defense is impregnable. That's actually a word. I know Mike Tyson be saying stuff, don't be sounding like words. Impregnable is a word, right? That's Mike Tyson. As a trader, your defenses are grading your setups and saying this trade that I could take is a C. I'll pause on it. I'm okay if it wins because I want A and B trades. But then before we get to grading them, you got to be right. You got to even have some level of a system to be able to say distinctly, precisely as a business owner, because trading is a business. This trade, I could risk 1,000 to make 2,000. That's 2 to 1. That's a C to me. I don't want it. I don't want it. I want 5 to 1, 6 to 1, 7 to 1. It took a lot of work to get there. It took so many years to be able to see a 10 to 1 trade clearly. And they are there. They are. They're there. Trust me. They're there. Let's talk about winning real quick. I love this. I'm gonna leave y'all with this one. This is Tim Grover. He was a trainer for Michael Jordan, a great who knew he needed a coach, and this coach, right? Think about this. The dude who trained, who was Michael Jordan, Kobe Bryant's personal trainer, was not some NBA legend. Why do I say that? Because a lot of us think whoever, it's almost like, I don't know. I'm gonna just say that the best traders value coaching. That's all I'm gonna say. I ain't trying to sell you on me being your coach or nothing. But if Michael Jordan and Kobe Bryant were smart enough to get coaches, here's Tim Grover on winning.
Winning is not about the trophy and the accolades. It's about the grind. It's about the obstacles. It's about the challenges. It's about the pain that you endure along the way for that 30 seconds of being able to either stand on a platform, be acknowledged by individuals that are close to you. But when that happens, your mind has to immediately shift back because now you felt and tasted something that you could only get through winning. Are you willing to do it again?
Whew. Whew. Are you willing to do it again? That's trading, man. I love it. It's such a wild journey. It will beat the hell out of you. It will take all of your money and confidence and vision and hope. It will take everything from you, but it also can give you, right, the perseverance. If you sacrifice, if you get the coaching, if you're patient, if you have a long-term view. I know some of y'all are super serious. I know. But a lot of y'all still playing around. You just haven't admitted it to yourself. You don't take this serious. You don't put in the time. What did you do this past weekend? What you do this past weekend? I'm 95% sure I spend more time studying charts than all of my students. They should be outpacing me. And that's not because I'm a day trader and I have the time. Even after 4 when the market closes, I'm still probably gonna sit down and for about a good 2.5 hours, sit down and check a few things. All right. Now I know you got to get there. I know you got to get there, but it has to become more than just like, desire alone. Sacrifice, time, coaching, practice, patience. I'm just trying to speak to the principles. You know what I'm saying? So, I appreciate you joining me with my double view. With the double view. This is Noble Woods. If you need some help, DM me. I'm teaching right now a live futures course. It's going well. I'm teaching a live options class. Going well. Slowly building them up. Also doing a little rebranding, which I'm having some fun with what's coming. I can't wait for y'all to see what's coming this year from me. I can't wait. But for now, tune into these lives. Check me out on Being Noble on YouTube. If you're in the Insider Trading Room on Facebook. If not, if you're watching this on like YouTube, join Insider Trading. Go to Facebook, go to groups, type in Insider Trading. You'll see these gold bars at the top. Started by me and my cousin. Literally 10 years ago. It's been an amazing ride, man. I feel like I'm just getting started. That's the crazy part. And that's a good place to be. That speaks to the energy, continued passion, zeal, excitement, energized. I'm energized. I love what I do. I love helping you guys. So that's about it. Talk to you soon. Be well, be safe. Share this video, please, with somebody that you know and that you love that needs to seriously start thinking about their finances in a real way, needs to start investing, or if they're trading, they need to really get serious and put the time in because it's going to take some time. But the benefits, man, they're there. Market is there every day, ready to pay you. If you can take from it, if you're disciplined, if you follow your strategy, if you take your A and B setups and not the C trades, and get some good coaching for somebody who can look over your shoulder and say, yeah, you shouldn't have did that. Let's work on this, do this, got to get better here. Right. That's what it is. So thanks for watching. Talk to y'all later. Peace.